All right, so welcome back in today. We're going to be diving into not only Bitcoin, but also market conditions, take a broader look at how the future of DeFi might be holding up through not only this bear market, but maybe our next bull run, because a lot of conditions are really changing in the marketplace. We'll dive into that deep. My name is Paul Barron. Welcome back into Tech Path. Of course, joining me today is none other than Cory Klippsten, who is the founder of Swan Bitcoin and CEO over there. Great to have you, Cory.
Great to be here, Paul, and nice to meet you. First of many,
Yeah, excellent. For sure, it is. Listen, Cory, a lot has been happening around the industry for about the last 90 days. It seems like everything's kind of percolated quite a bit. You've been one of the biggest and loudest, I would say, people out there when it comes to kind of showcasing and exposing a lot of these issues that we're facing right now. Many of those obviously around Luna, UST, now obviously with Celsius. First thing I want to ask you is, when you look back at those projects, because you were really kind of claiming that these were problems well in advance, what were the key things that were really the indicators that you were seeing that not a lot of other people were seeing?
Yeah, so again, standing on the shoulder of giants, but those giants being managers of some small crypto funds and some Twitter anons in many cases with small blogs and things like that. So when I came to it, what caught my attention in a big way was when they got close to Bitcoin. My company, Swan, is a Bitcoin financial services company, and we put out information and educational content about Bitcoin and sell Bitcoin and have 10 or 11 products surrounding Bitcoin. So I pay attention when someone from the altcoin space starts, sort of sidling up to Bitcoin and doing kind of the Bitcoin affinity marketing thing. And that's when I'll actually pay attention and do some research. Otherwise, honestly, would have been just another, pretend Ethereum killer, whatever, who cares? Another L1 doing their long run pump and dump thing. And but when they did the Bitcoin reserve announcement and Do Kwon started showing up on Bitcoin podcasts and big Bitcoin Twitter handles tweeting out, "This is bullish for Bitcoin," whatever, I was like, I've literally never seen anybody in crypto do something bullish for Bitcoin. So I'm gonna at least go a click deeper and figure it out. So it was kind of late March, and finally, one weekend I sat down for 45 minutes, watched a couple YouTube videos, interviews basically of people that actually kind of knew what was going on there, and did some research. And really what crystallized it for me was just trying to figure out who benefited from this. And what specifically was the actual true Ponzi scheme dynamic at play in the Luna ecosystem was the Anchor protocol, and the fact that they, so the Luna company and Jump Capital kept on topping up this Anchor reserve, which was 20% interest for anyone that parked UST at Anchor, and trying to figure out why would they do that? They claimed it was for marketing, but they gave away $1.5 billion. That's enough to name a couple sports arenas and buy out the entire inventory of the Super Bowl. That's not good marketing spend. So what's really going on here? Well, they must be making more money another way. And the way that they were making more money is that this interest was actually a cheap bribe to get people to park UST in Anchor and make the UST market cap rise, because that fooled dumb fund managers and retail around the world into thinking that there was a vibrant ecosystem arising around Luna, of which there was nothing of the sort. All of their partnerships were pretty much fake or dated or just tiny. And there was really nothing going on other than this Ponzi scheme. And basically what was happening is the price of Luna was pumping and got, up into $100 or something like that. And the Luna team, Do Kwon and their executives, and obviously their early VCs, were just dumping their Luna into this manufactured Ponzi scheme pump and dump.
Yeah, I think you're to the point that you're getting at. I think a lot of times people don't really understand the mechanics behind that. So obviously you do need a little bit of skill set to, one, identify those things, and then the other is, I think at the time in which this was occurring, so many people in the crypto market were, they're just looking for good news. Obviously, we were on the downside of an all-time high. So a lot of that kind of fed into the nature of how Ponzi scheme works. So you're exactly right. When you look at...
You make a good point. That was the other thing. So there was that. I'd say the second leg of the stool was, the the crypto market peaked in November. And so if you were
Right.
checking out CoinMarketCap or, I just log into Delta every few days and at least keep tabs on what's going on in crypto because it's adjacent to Bitcoin. And the only thing that was green and that was moving up the charts all winter
Luna.
was Luna.
Yeah.
And then, I started out, some people know I actually started out in crypto. I spent almost a year in altcoins thinking that there was something going on there before I understood much more deeply the difference between Bitcoin and altcoins, and focused exclusively on Bitcoin since kind of early 2018. And so I'm still in some of these groups with crypto fund managers and people who run prop trading desks and everything. And I go back and remember in March and go search for Luna in those chats. And even in December and January, it was referred to as the Luna Ponzi back then.
Yeah. Yeah.
So insiders already knew. The Panteras of the world that made 100x, the Galaxies who profited from it, like they actually knew that it was a Ponzi, long before some dumb people got caught holding the bag, unfortunately.
So you bring up a point here. This is something that there's been several people. I was listening to Chamath Palihapitiya talk about this the other day on his podcast, and he's representing a lot of these early stage VC funds, which if you've been in Silicon Valley, I grew up, kind of investing in that area and in the tech area. That's really where, my background lies. And one thing that I always understood, at least in investing in Silicon Valley and a lot of these startups, many of which would go to zero. I've had the brilliant ability to take several companies to zero and not see a bit of return. But when you look at how early stage capital is going into some of these crypto projects and essentially getting an exchange back on tokens, instead of actually seeing the project evolve from, what do you think is going to happen down the road if we ever see regulation around this, especially on these VCs who are taking tokens in exchange and then cashing those tokens out into the marketplace? And obviously, we haven't seen any, litigation on those kind of things. But what are your thoughts on that?
Yeah, so there's not going to be a criminal case because thank God in the USA we have a tendency not to prosecute people for laws that aren't on the books yet. But I think there is a lot of exposure for the investors that pumped these things and marketed them because in civil cases, all you have to prove is that it was reasonable to assume that something was a security. So if you basically
Right.
used false marketing promises and didn't register the thing as a security, and a court reasonably sees that was a security, you actually do have civil plaintiffs and class actions that can go and pursue damages, but no jail time for any of the people that have been running these pump and dumps for the last 4 or 5 years.
Yeah, and there's a bunch of them out there. And I think the key here is, if you're watching our show, obviously the key thing we get into is a lot of deep dive interviews. So you guys are doing your own research and hopefully doing a lot more research, especially in these stages, whether you're all in on Bitcoin or you're doing some other projects out there. Cory, let's get into.
I want to
Go
just
ahead.
give kind of an analogy that I think is really helpful for understanding this moment in time. Sort of pre-regulation, when these crypto projects are able to just sort of like come up with a false promise of something that blockchain or crypto can do, which none of them have actually succeeded in doing, sort of adding real world value. It's all sort of like a snake chasing its tail. And, it's kind of a reflexive levered market, speculation essentially for everything that doesn't have a use case as money, which is what Bitcoin is. And a good analogy for it is kind of online gambling in the aughts. So, call it from like 99 through 2006 or 7, when the government kind of chopped the head off of it. It was a really good place to make money for a lot of people while it was legal. And a lot of those people rolled profits into ad tech companies, and a lot of those ad tech people rolled their money into crypto. So a lot of the entrepreneurs in crypto or altcoins actually come from online gambling and ad tech, which have been kind of the places where you've been able to create sort of inventory and money schemes like just outside the reach of regulations by being kind of smart with data and kind of creating things out of thin air essentially, and finding a market while you can. But eventually these things get clamped down on either by government or by market forces or just by people waking up to the game of foot, right? And so I think essentially there's just this massive cash grab because people that actually know what's going on in crypto know that these schemes are not long for this world, and they're just getting the money while they can, as long as the window is open. And as long as, the government is sort of like ignoring the fact that there's a bunch of securities trading on Coinbase, which isn't registered as a securities exchange.
Right. Yeah. Okay. So, but you would not deny when you look at blockchain in general, the technology of what blockchain represents is quite unique and different, at least in the potential of what it could mean for, internet use case, a lot of utility applications in the future. You're
Oh, I
all
would
in on
absolutely
blockchain?
deny that. Yeah, not at all. I think blockchain is a marketing scam.
So
Yeah, I
you
think that,
completely are out
yeah,
on the whole idea of where blockchain is going.
blockchains have been around for 40 years. Any use case that people have tried to apply it, it's just a slow, expensive database. So far, the only use case for blockchain so far that's of any value is as part of the system designed for Bitcoin. So
Mhm.
basically saying like, let's take the underlying technology and do something with it is like removing an airplane wing and thinking that that's something that has to do with flying the airplane. But you take the other systems involved with flying the airplane away, all you have is basically like a long dining room table or something. You just got an airplane wing. So that's what blockchain is. So as an example, Fidelity, had a whole team from like 2015 to 2019 or something like that, trying to find use cases for chain technology. They did something like 50 proofs of concept, trying to look for anything to possibly do with Ethereum or anything else. 0 for 50, nothing, shut it down. Like there's just no use for it. And obviously there's some of the biggest Bitcoin proponents out there
Yeah,
now.
yeah, for sure. Well, and I think, in general, when you look at how technology innovation usually happens, whether you look back at early, mid 90s, really at that time, many of the frameworks that were really being built on for what we now know as the internet were in the same kind of boat, is that many of those types of technologies, many people never believed that they would ever be utilized for anything of real nature or use case. So it has been around and we've kind of gone through that cycle before.
I think that's basically something that crypto people use to pump their tokens. So they like, they used to say 90% of startups fail, which was also an overestimation. That's also like a little bit high. And that's kind of how VCs justify going for home runs and having so many failures. Now I'm seeing crypto people claiming that 99% of startups fail to try to analogize what's going on in crypto. But at the end of the day, literally the only companies that make any money in crypto are the ones that facilitate trading. So
Yeah,
if you can do the dance of short time to liquidity, and we make our own weather, which are basically the only two slides required in any crypto VC's fundraising deck for their
yeah,
LPs. That's kind of what's at play. It's the fact that it's just outside the reach of regulations today. You can say whatever you want. You can promise the world about blockchain technology and crypto, this, that, whatever, and get away with that and have that short time to liquidity where you can pay to list on exchanges. You can use some of your token pile and some of the money that you raise from the crypto VCs to fund market makers to paint the tape and make it pretend like there's some interest and there's some support at different price levels. But you're really doing a bunch of things that are completely illegal in traditional securities because they're not being regulated today. And
yeah,
by the way, I'm not in favor of regulation. I can totally be agnostic about that. What I'm against is hypocrisy. And so, there are people that are very principled and very smart that I hang out with who are, take more of an anarcho-capitalist approach. And they say that if you got rid of the SEC and all regulation, the market
hmm,
would have solutions that arise, and that's totally fine. And then you would have, associations that do research or whatever. And they would say like, this Ponzi scheme over here, and I'm going to rate this one like relatively less risky, whatever. But what's not really okay, I think, as a society is to basically say like, you know, I think if you're anti-regulation for crypto, then you should be, in DC banging the table to remove all regulations for Ponzi schemes targeting your grandma, that you should be in favor of penny stock operators being able to send direct mail to nursing homes, and basically like everything should be all systems go. But if, like Brian Armstrong and Coinbase, you want to build a company that sits on top of the regulatory framework, the trust and experience that regulators and markets have, that give us this amazing capital formation that we have in the United States with the best regulated and sort of most productive capital markets in the history of the world. And you want to benefit from that. But then out of the other side of your face, you want to say, but please ignore these unregistered securities on my exchange. And my exchange, by the way, please don't regulate that. And let me just go ahead and say asinine things about the SEC. which bought my $135 million mansion. Like you just can't have it both ways. Stop being a hypocrite is basically the ask of the crypto people.
I love it. I've watched a few of your interviews. I love the fact that you pull no punches here. so that's good in the essence of what your beliefs are. When you look at Cory, when you look at kind of the conditions of what we're faced with right now, obviously Celsius pretty much on the verge of bankruptcy, most likely will go into proceedings, whether they go into Chapter 11 or 7 on a reorg, whatever that route looks like. How do you think that's going to play out right now? Do you see any assets in there other than maybe the loan structures that are in place right now that could be salvaged for those investors?
Well, the brand itself obviously has negative equity at this point. So then it's a question of, is there value in anything else? From a systems perspective, obviously you're not going to buy their risk management setup, and you're not going to want any of their talent. So I don't think there's no one really, there's no employees that you want to buy there. And so I guess maybe their customer list, which is probably not anywhere close to 1.7 million that they claim. I'm guessing that's anybody that's ever had an account at Celsius. So maybe it's like, a third of that or something like that. So I think essentially what you're looking at, unfortunately, is the asset pile of their customers' funds that they've sent to Celsius.
Right.
And there's a workout of that, and they've got to plug the hole in their balance sheet. And unfortunately, these unsecured creditors to Celsius, they're not depositors. This was not regulated. This is not a bank. Well, I should say it is a bank. It's just a wildcat bank that was unregulated and incredibly poorly run. So basically, regulated banks were not your friends. But Mashinsky claimed that his really crappy bank was in fact your friend. It was not your friend.
How do you see this playing out for those who have gone the direction of, say, someone like a Voyager, who has an FDIC cushion, at least on USD funds, obviously not with crypto held or USDC or other stables? How do you see those kinds of situations playing out with someone like a Voyager?
Yeah, I mean, Voyager also has negative equity at this point. I would say that the brand name is a little bit better, and so you can probably do something with that. There's also a slightly better management team. You can obviously take up some issues with them parking $650 million of their users' funds with Three Arrows Capital, which again, there were people that actually did diligence on Three Arrows Capital and refused to send money to them in the last 6 months, and also pulled funds from them back in March, April. So it was not something that was undiscoverable if you were actually,
Doing the
on
work.
the high end of the spectrum of good risk management. So I think that brings into question quite a bit, how that was managed on the Voyager side. Obviously, a tiny percentage of unsecured creditors that they call members actually hold US dollar balances. So it's almost all crypto, right? So it's FDIC doesn't play into that at all. I don't think that they have enough big backers. And again, I think enough management team with experience and connections and a good enough brand name that I think they survive. I think there's a very good chance, from what I'm hearing, and I've been talking to reporters and industry insiders the last few days, I think there's a very good chance that FTX actually buys Voyager as another distribution channel for their
Yep.
business. I think that would be probably the most likely one for them to swallow. I don't think they want to own BlockFi. That's just kind of a personal opinion. I think they'd rather have BlockFi stay independent and let somebody else sort of plug the hole at BlockFi. But I think Voyager probably does make a decent bit of sense for FTX to pick up. I had somebody describe it to me as when, not if, this morning on
Yeah.
on FTX actually acquiring Voyager, and it looks like in the loan docs, and I haven't looked at it myself, so this is secondhand information, but it looks like they can pick up Voyager for something like $10 million at this point.
Interesting. That would be unreal. All right.
Yeah, I
So
mean, a year ago,
block
Voyager was what,
and
7 billion
exactly.
market cap
Yeah.
a year
Yeah.
ago.
So, and you look at just where they are, from a publicly traded, obviously that would delist them, I would think, at that valuation.
Yeah.
When you look
Yep.
at BlockFi coming into it and the FTX deal, if I recall, based on our research, is they can essentially take this on for zero. You got Morgan Creek making a
Yeah.
play at it. So with BlockFi, Celsius, Voyager, possibly sliding either into restructures or out of the business in the essence as we know them today, it's going to leave a fairly big hole in the marketplace for a lot of customers, both from a trading side, also from the utility side of just parking their coins there, because so many
Yeah.
people, unfortunately, are not doing self-custody, even though we preach it here on our show. Where do you think that market is going to go? Do you think it's going to go into the traditional exchanges like Coinbase, FTX, Binance, et cetera? Or do you think people are going to get smart here and start to do a lot more self-custody?
Yeah, well, I can tell you a lot of it's been coming to us. Market's been crashing and we've been exploding, which is great, both in user numbers and revenue. And I think that's just people waking up to the fact that, I and lots of others have been pointing out for years, which is that the CeFi lender model is inherently risky.
Yeah.
Even if you're making like 5%, you have to trust this thing not to blow up for 20 years straight. So it's kind of just you're basically giving them your money and they're going and doing risky things with it,
Yeah.
and you're not being compensated like an LP, which would be 80% of profits, and you're
Hmm.
not being compensated like a lender to a hedge fund, which would be sort of high teens mezzanine lending rates is what you should expect, like 1% per
Exactly.
month or 1.5% per month, and that's for a really good counterparty. That would be lending to large hedge funds with 20 years experience and things like that, not these
Yeah.
sort of shady entrepreneurs with criminal connections that tend to run these things. At least in the case of Celsius. And so I think you see BlockFi and Voyager probably survive as brands with totally different capital structures, probably totally new management. In BlockFi's
Hmm.
case, maybe Erlich and a few others survive and keep running on the Voyager side because they end up being a unit of FTX, and FTX uses their sort of back end and risk management to run Voyager's risk book from now on. So they'll
Yeah.
feel comfortable with that. I think BlockFi probably tries to stay independent, but again, basically gets taken over by new people and the existing cap table gets wiped out to zero. Celsius will be completely gone and will be in the courts for a long, long time because, again, like the public record of misleading and false marketing statements from inception back to 2017 with the false marketing of the ICO, the false marketing of Mashinsky's background, like every claim that guy kind of made, his four tentpole claims are all false. He didn't invent VoIP, never raised $1 billion for startups, didn't have $3 billion of exits, was not involved in the most successful IPO of 2004. So kind of all the things that he claims are false. So I just think there's a lot of litigation coming up for Celsius,
Yeah.
and it'll just be like in courts for many years. Nexo and Abra, I think, just see dramatically dwindled numbers of users and assets on platform as people wake up to the fact that they are unsecured creditors to these businesses, and that these are not just like higher yield savings accounts, and that the use of the word deposit is completely duplicitous in the case of these businesses. So I think you'll see some go to the centralized crypto exchanges, and then I think a lot will come to companies like Swan, especially for Bitcoiners. We're a much better place to buy Bitcoin than these crypto
Yeah.
exchanges and these CeFi lenders.
Talk to me about, okay, so Swan, I've been watching you guys for quite some time.
Mhm.
Basically, it's a 1% fee. You guys manage,
Yeah.
you can either hold and do custody or you can, migrate that into self-custody. And it seems pretty
Yep.
straightforward. How are you guys doing your deals? Are these OTC deals? Are you doing stuff directly with miners? How would you go about acquiring Bitcoin for a client of Swan?
Yeah, so we have the best pricing in the market, zero spread. So what we would see on like Google or Coinbase Pro or something like that is exactly the price that you would get at Swan. Very transparent, 0.99% fee on all purchases. Almost nobody sells at Swan. Our orders historically have been 99.98% buys and like
Hmm.
a few hundred or a few thousand sells. So it really is a Bitcoin accumulation platform. We highly encourage self custody. We've built incredible tech, like things like being able to use an XPub, which means that you don't do address reuse without actually
Right.
exposing your XPub to us. So that's something that we actually invented and then open sourced. But I think things like that are really important. We have free custody if you're not ready to take self custody. We have free withdrawals. You can set up automatic withdrawals so that it triggers basically as soon as you've accumulated a certain number of Bitcoin or a certain amount of Bitcoin, or on a date basis, so you can withdraw every month or something like that. In the This is when it's on the platform, it's owned in an individually owned trust account, and Swan cannot access your coins. We can't touch them. We can't move them. We can't do anything with them. Only you can actually withdraw your coins. So always built with self-custody in mind. We educate on self-custody all the time. We help people along that journey and teach them how to think about hardware wallets, think about multi-sig and all these different things. And then once
Yeah.
you kind of restrict it to just like we sell Bitcoin, it sounds simple, but if you have that goal in the middle of like a crypto exchange with 100 altcoins and you know fake education extolling their benefits like you would see with Balaji's earn.com inside of Coinbase, fooling you into think that these things are like buy and hold stocks or something like that, you really can't get deep into it because it's something in the back of your mind, it just rings false. And so what you end up with people that are kind of exploring crypto is they'll be like, 1 or 2% of their portfolio sort of experimenting with crypto. When people get deeper into Bitcoin and they actually understand what it is and they understand that it's the store of value that's better than any store of value technology that we've ever had as humans, what you get is people going 10% of their portfolio, 50%. Maybe you'll have young people that are just like, what, my savings is Bitcoin. I'm not doing
Right. Yeah.
stocks, I'm not doing bonds, I'm not doing crypto. I'm just like putting all my money into Bitcoin. If I have extra, it's all going into Bitcoin, and like that's their long-term savings account. So you essentially have 100% of their net worth in Bitcoin.
So
So that's been really kind of the big surprise for us is when I modeled this initially, I was thinking of like a much smaller revenue number per user because you're only going one way, you're only doing buys, and you only have
right.
one asset instead of 100. And what's happened instead is that our revenue per user is over 4 times what Coinbase's is.
That's great.
So
So
people who
okay.
are into
So
Bitcoin buy a lot of Bitcoin.
yeah. So to answer the questions, do you guys do OTC deals, or are you going in direct with miners? How do you acquire it?
So we're hooked up to OTC desks, with Prime
Okay.
Trust actually being the
All
settlement.
right.
So the
Gotcha.
custodian that actually owns the compliance regime and the AML KYC also has settlement. And so we basically through APIs connect to OTC desks that are also connected at Prime Trust. And
Yeah.
then the trades cross as soon as the dollars arrive from the wire or the ACH transfer.
Which is how you eliminate the spread issues that many exchanges come into. And yeah, perfect. Okay.
Exactly, because we don't have principal risk.
Exactly. Yeah. Okay. A couple other questions I have here on the macro side. I've listened and watched a lot of what we've seen around Swan in the past. When you look at the pressures that, in general, the monetary system is facing right now, whether it's the potential, creation of what we might see from a CBDC side of things, what we're seeing right now from an inflationary scenario that's happening in the U.S., obviously Europe. You look at what's happening with the digital yuan. With all of these pressures coming into the space right now, obviously I know you're going to say Bitcoin is the safe haven, but when you look at that, there is a timeline. What could that be? Do you feel like this is something that's going to happen in the next bull run, or do you feel like this is more of a longer term yield horizon out there?
Well, the macro safe haven for the globe is the US dollar.
Mm-hmm.
And, you basically pay, you know, 8% insurance per
A year.
year to hold
Yep.
it, right? Because that's where inflation is, and we print lots of it. But, people, it's better than it's the fastest horse in the fiat race, basically.
Yeah.
And the returns that you get from Bitcoin in the next 8 to 10 years or whatever that is, which I think will be considerable, is compensation for being able to weather the volatility that is inherent
Correct.
in the path that a new store of value must take to get from like zero market cap 10 years ago or 11 years ago to where we think it's going. If it gets to be gold, that's $500,000 a coin. Twice gold would be $1 million a coin. If it gets to like 25% of the global market for store of value, for which it's the best tool for the job, then in 2022 dollars, you'd be talking about 100 trillion market cap, right? Which is
Yeah.
$5 million per coin. So over some time frame, I think it does all of those things and becomes a medium of exchange as more and more people have nothing else to spend. That's when there's consumer demand for actually spending Bitcoin, is when they
Sure.
don't have crappier money to spend. So don't jump the gun thinking that like things need to be price denominated in Bitcoin. This thing is still incredibly young. What is it,
Yeah.
400 billion market cap today, right? It's tiny. It's a drop in
It's
the
a
bucket
baby.
compared to where it's going to be. I
Yeah.
don't even see Bitcoin widely used as a medium of exchange until you get, at least above 500K per coin, maybe $1 million per coin. So I have kind of
Interesting.
like a
Okay.
2035 target for, Bitcoin as a widely used medium of exchange, and kind of also having a lot of things kind of priced, goods and services around the world priced in Satoshis is probably 15 years away.
Yeah. Cory, why do you think we have not seen the lineup from a nation state side of things? Obviously, just a handful of countries have kind of moved in this direction. El Salvador being kind of the somewhat poster child. You've got Central Africa also moving in this direction. But it seems like there's a lot, especially if you look at some of the emerging markets, mobile-driven emerging markets, which really kind of lean
Hmm.
into, the millennial population, the Gen Zs, which will be the ones that really will reap the benefits of where this is going. Why do you think that's been so
Yeah.
slow? I guess it feels slow to me. Maybe it's not.
I mean, I don't think it was ever really, it was never on my 2021 bingo card that a nation state would say, oh, we're making Bitcoin legal tender. It's completely
Yeah.
unnecessary for the trajectory of Bitcoin. And, I always thought that kind of narrative of like, oh, well, El Salvador did it. It has to go well in El Salvador or Bitcoin's dead. Or,
Yeah,
if no other
exactly.
nations do it. I never bought into any of that stuff. I mean, I support obviously experimentation, and they kind of went hard at medium of exchange for Bitcoin, in my view, like at least 5 years too early, maybe 15 years too early. But that is awesome to have an incubator for experimentation. And there are edge cases that, add up across different countries to become very, very large. I
Hmm.
think if you took just based on population, there's probably 10 times more people using Bitcoin every day in maybe 100 times more people in Nigeria using Bitcoin every day than there are in El
Right.
Salvador. Right.
Yeah.
And there's
Yeah.
no acknowledgement of Bitcoin from the government, and the government actually fights against the adoption of Bitcoin, but people use it anyway. Argentina looked like it was going to actually pass something, and then the
Hmm.
IMF, with printed dollars, went and bribed them basically to not do it. So, there's a counter. There's someone looking to counter these moves by governments that are getting interested in Bitcoin and that don't want to see it spread. They have their policy papers and whatever it is, but they'd like to keep the
Yeah.
existing system going as long as possible, right? So,
It feels like there's a little
yeah,
bit of a
it's not
delay in
important,
there,
really.
though. If you look at the markets and kind of what's been happening from the banking regimes, and now obviously we've seen different scenarios of even, JP Morgan trying to do some strategic things within the space. How far away are we now from possibly banks being able to get into Bitcoin and actually do custody?
I mean, they already can. So there's nothing blocking them from doing it today. State Street custodies Bitcoin.
Hmm.
There's a
Yep.
bunch of banks that have Bitcoin funds. Morgan Stanley sells a ton of Bitcoin into private funds. NYDIG has a bunch of private funds selling Bitcoin. There's a bunch of credit unions that actually are starting to have it. And this is, again, kind of starting from the small end, but you can just buy Bitcoin right there in your personal or your commercial bank account at some of these credit unions that started this year.
Right.
And it's just getting easier and easier to find ways to buy Bitcoin. I mean, Swan is global. We sell in over 100 countries. We make it extremely easy to onboard an entity account like a business, a trust, retirement accounts in the US, individual accounts in 100 countries. And, we actually care about getting people onboarded and doing it fast and easy and solving your problems, which I think is kind of a unique, amazingly, to have good customer service and products that actually work and actually want your business. Evidently is unique in crypto, because I don't know if you
Yeah.
ever try to sign up for like an entity account at a crypto exchange, but 55 emails later you'll be like wet signing a PDF or something for their compliance department.
Yeah, I've actually done that a couple of times, so I know exactly what
I
you're
just
talking
gave
about.
up. I'm not
Yeah.
I'm not going to call out, but like one of the U.S. exchanges, I initially for this business, 2 years ago, tried to sign up for an entity account. I gave up after 3 months.
Yeah, it's almost impossible versus, I mean, it's somewhat easy enough through traditional trading for, in traditional finance and securities. But once you get into some of the exchanges, it is much more difficult to kind of go in that direction. Last question for you is the
Yep.
Lightning Network, the potential of how that might be utilized in, say, the next 2 to 3 years. Are there any potential future aspects to where Lightning is today and what that might mean for Bitcoin in the next, maybe during this next bull run?
Yeah, absolutely. I think that the way I think about it is the number of people that really want to use Bitcoin as a medium of exchange, that actually want to buy things with Bitcoin, are generally people that had conviction and were
Yeah.
putting a lot of money into Bitcoin 8 to 10 years ago. And so this cohort of people today that are interested in Lightning is basically the people that were buying Bitcoin, 2011 to 2014,
Hmm.
in size and had conviction on it. So I think this next wave of the people that got pulled in 2016, 17, 18, 19, maybe, as that cohort matures and has been in for like 8 years, I think there's, probably 100 times more people in that cohort that will be, have 90% of their net worth in Bitcoin if Bitcoin goes into six figures or something like that.
Yeah.
And so by
Yeah.
2025, 2026, there's now consumer demand for a lot of these services. The companies that are, 5 people and 20 people today, like the Galois of the world, the Breeze wallets, Swan is building a self-custody, non KYC Lightning wallet into the Swan app later this year. I think it's important to be, understanding the Lightning Network, having real estate on the Lightning Network, and being able to capture a lot of the flow and kind of understand what that real estate looks like on the Lightning Network and how things move, and different revenue models and different ways that you can apply this technology. But this is really the internet of money that we're building. Layer one is Bitcoin, and it's a lot like IP, like Internet Protocol. Lightning appears to be the layer two with the most promise and the most momentum. It's growing exponentially, and it's really
Hmm.
exciting what you can do with it in a lot of different ways. I'll give you an example. I think the narrative with a lot of these companies publicly has been, people paying for things to companies, and the companies actually needing to accept Bitcoin because people had demand for it. There are a lot of companies, it turns out, that have a lot of people to pay, and yet the payment processing business takes such a huge chunk out of them because they work in the adult industry or the cannabis industry or online gambling or whatever. But these are just absolutely massive
Yeah.
industries. And using Bitcoin rails, whether on-chain transactions or Lightning transactions, in particular when you have a lot of people to pay out, and then if those people, you can pay them over Lightning with a quick change into their local currency, or they can do it themselves and they can just accept the Bitcoin. But you can also use these centralized crypto exchanges around the world, those with a big footprint like the Binances or the Bitrexes or whatever, or the Bitfinexes. And if they have local currency pairs, you can just pay them over those rails
Right.
in a spreadsheet, basically in a database, and get them paid out in their local currency, and completely avoid the legacy payment infrastructure, and chop your costs from like anywhere from like 5 to 12% for a lot of these industries to make payments out to their contractors or whatever, or
Yeah.
people on their platform that they want to pay out, and you're cutting that to 1%. I mean, there's so much growth in that, and I think that's what Block is waking up to that. Stripe is waking up to that. OpenNode
Yeah.
is absolutely crushing in that business, and is far and away the leader among the Lightning companies on the payment side. OpenNode out of Los Angeles, big fan of those guys. Wish I had a piece of that. I don't,
Yeah. Well,
but
you mentioned
I
Block and
think it's gonna
Stripe
be
because
exciting.
yeah, you're exactly right. The moves obviously with Dorsey and obviously what we have seen kind of coming back around to it from the Stripe management. I'm surprised yet that we've not seen a full onboarding of Bitcoin, accepting just Bitcoin and being able to utilize it as a tool set like that within Stripe. Hopefully, we'll see some movement out there for sure. Man, Cory, it's
Yeah,
been great. It's been great picking your brain here, and always fun
yeah.
to talk with people out there in the
Can I
industry,
invite
very
you
knowledgeable.
something, Paul,
Yeah,
before
sure,
we
anytime.
drop?
Yep.
Okay, so we're doing the largest Bitcoin only conference in the history of the world in Los Angeles this fall, November 10th and
Okay,
11th.
great.
It's called Pacific Bitcoin. It's at the Santa Monica Airport in the Barker Hangar, which used
Okay.
to be the place where like MTV Awards and American Music Awards and all that stuff. So it's a really
That's
fun venue. We're
fun
going to do a
times.
great job. Crypto people are welcome in the audience, but there will be no altcoiners sponsoring or on stage. So, so
Gotcha.
Bitcoin only for a couple of days, but yeah, it should be a blast. Would love to have you come out, and again, thank you so much for having me
Yeah,
on, and putting up with my relatively straightforward views on things.
not a problem, Cory. Thanks again for stopping in. We appreciate it.
My pleasure.
Excellent. All right, you guys are tuned in over on the podcast side of things right now, whether it's over on Spotify, Apple, iTunes, wherever it might be. Give us some stars over there. But the place that you want to catch all of this great content is right here on the YouTube channel. It's where you're going to catch the interviews, a lot of our analysis, how we look at our own sentiment data, all that kind of stuff. But of course, if you want to join into our group, it is the Diamond Circle. It's very simple to join. Just click the link below. You'll get in. It's free. And it's a couple of emails a week that we do a lot of AMAs, a lot of insider baseball stuff. So make sure and jump into that. And of course, if you want to reach me, it's out on Twitter at Paul Barron. I'll catch you next time right here on TechBath.